First question. And I think starting with Sam and then coming to Gary closest to me, if you could just give us a very short introduction, briefly describe who the borrowers are that your platform is focused on and what you believe your addressable market within the next 2 to 3 years is.
Sure thing. So I'm Sam Hodges. I'm the co-founder and head of Funding Circle in the US. Funding Circle is the world's leading marketplace for small business credit and the first one to be doing this internationally. This year are on track to do about $600 million in origination, focused exclusively on small business loans between $25,000 up to about $1.5 million. The loan that we're providing is really meant to be a substitute for what banks used to do in the space. So the ability to finance at a reasonable rate things like equipment purchases, building out a new location, purchasing a business, and I would say a prototypical borrower is probably doing, call it anywhere between $500,000 and a couple $1 million in revenue, looking for capital to really expand and grow. One nice stat is after a Funding Circle borrower takes out one of our loans, typically they hire anywhere between 3 and 4 additional people within 6 months.
I think just as a follow-up, clearly the market is large, 200 billion, 400 billion, plus 370 billion. But sitting here with some of the leaders in this space, in the term loan market, we have less than 500 million in outstanding portfolio. So I would wonder, yes, there's a giant market. What actually can investors expect, and what can we expect to achieve within the next 2 to 3 years?
Banks have structurally pulled out of sub-$1 million term loans to small business, and when we think about what are the dynamics that are shaping our business, it's not competition, it's not lack of addressable market, it is purely awareness and borrower acquisition. And so we think it is very feasible in the United States to build a multi-billion-dollar origination business on an annualized basis quickly over the next couple of years.
Great. Well, I think that leads into the next question, which I had was really focusing on, Noah, last year at Lendit, you mentioned that OnDeck was able to weather the financial crisis that went through and changing credit environment because of the short-term nature of your product and because of the flexibility. And now that you're up here with this longer-term product and you're surrounded by 4 other companies that also are going into this space, I'd like to hear how you're structuring the product. I'd say maybe first to Noah, and then we can open it up. How you're structuring the product to really tackle the additional risk of going longer term and anticipating weathering additional credit cycles.
And just to add on to that, I think there's a really big difference between doing sub-18 or even sub-24 month and then multi-year term lending, simply because the return on capital envelope that a small business has isn't necessarily going to be able to support a really short amortization schedule and a teen or even much higher rate. The way we think about it is if we can actually price a secured term product within the return on capital envelope a typical small business owner can get, we actually avoid a lot of the adverse selection problem that some of the other shorter term lenders out there have already experienced.
What about the use of technology in terms of how technology is able to assist with going longer term? Is technology as useful if you're doing 5-year loans as it is if you're doing 6-month loans?
We also use technology around pulling in third-party data sources and making sure our credit model is evaluating the right things within a loan file. There really are 2 other major areas that I think are just as important in terms of use of technology. The first is really around borrower experience, making sure it's very fast, making sure that people are presented with the right questions, making sure that overall the experience is really seamless. That again helps get the best borrowers and avoid some of the adverse selection that if you're kind of a smaller lender who has a more uneven experience, you might have. The other piece of it really is in the workflow tools we provide for commercial underwriters. I think one of the biggest differences about the Funding Circle model is we have 2 technology-driven steps in underwriting, but then every single loan that we end up placing on the marketplace goes to a commercial underwriter, someone who's really experienced at looking at files, rigorously analyzing them, and it's only at that step where they eventually get funded. And we can work a file through our commercial underwriters in a very streamlined way because of the technology systems we have on the back end.
Do any of you think that within a few years you'll be fully automated with no judgmental or human servicing?
I think transparency and service being one of the points we were just talking about, are 2 of the things that are most important in terms of creating a really good approach for finding the highest quality borrowers and making sure the capital is priced quickly. I can speak to this as a small business owner myself, which is actually kind of how I got into this. I spent a bunch of time working on Wall Street, had built another financial technology company, and then along with my co-founder opened a set of gyms. Really profitable, lots of assets, lots of cash flow, talked to 90 different lenders. 1, had a heck of a time getting a loan, but 2, most of them couldn't even produce an amortization schedule, let alone alone an actual calculation of what the APR is. Most people, particularly the smaller ticket lenders, quote in terms of a monthly payment. And if you're a small business owner, you're sitting there, you're getting flood of direct mail with all sorts of crazy, propositions being thrown at you. It's just very, very confusing. And so at Funding Circle, one of the things that we try most to do is to make sure that a small business owner really understands what they're getting. We are extremely transparent around our fee and also what the monthly payment is and the interest rate associated with their payment will be. And part of what we do in the underwriting process, and this is the customer service point that I think Noah is speaking to, is make sure the small business owner knows what that means and feels very confident that they can pay the loan back.
Very quickly, if you could just mention, what's the opportunity for investors today and where you think there will be new opportunities within the next 12 months? And you just do it very briefly, I'd appreciate that.
Funding Circle's part, it's interesting because the US and the UK have kind of evolved to overlap. In the UK, we started with primarily a retail fractional product. The US, it started primarily as an institutional whole loan product. And actually, by the end of the summer, we'll, in both geographies, have the ability for people to go in and purchase whole loans, which they can do today in both the US and the UK. We'll have the ability for people to go in and invest through a managed fund product, so they can get access to the type of assets in a diversified way immediately through the platform, and also the ability to go in and pick and choose pieces of loans or have an automatic allocation for the types of loans that they want exposure to.